The FTSE 100 capped a torrid week with an even sharper decline on Friday afternoon after China unveiled retaliatory efforts against U.S. tariffs. China, which is now facing a total of 54% tariffs on exports to the U.S., plans to impose additional tariffs of 34% on all U.S. imports from 10 April. The latest escalation in the emerging trade war saw the blue chip index sink 5% by close and decline 7% since Monday. It means the FTSE 100 marked its worst day of trading since 27 March 2020. It finished at 8,054.98, having started the day at 8,474.74. Banking stocks plummeted, falling for a second consecutive day as investors become increasingly fearful of a tariff-driven recession. NatWest led the sector's FTSE 100 losses, falling 9%, followed by Barclays with an 8% decline. Also reflecting global growth concerns, mining stocks dropped as London Copper posted its biggest weekly loss in nearly 5 months. Bucking the trend, utilities gained and reached a 6-month high. Utility firms are seen as a defensive investment and are often traded as a proxy for bonds. Investors flock to the perceived safer haven off-government bonds, driving down bond yields, which move in the opposite direction to prices. Short-dated gilt yields, the interest paid on government debt, fell sharply as investors continue to flood into safe haven assets. 2-year gilt yields were down 5 basis points to 3.95%, while 5-year yields were down 6 bps to 4.03%. Similar moves were seen in global equity markets, with shares trading lower in Europe, Asia, and the US. Jason Hollins, managing director at Evelyn Partners, said, "Over the coming weeks, we can expect to see companies issue profit warnings as they model the impact of tariffs and analysts slashing their forecasts. It is hard to know how much further markets might fall before stabilizing. As both the real economy and the financial markets react to the uncertainty and upheaval prompted by President Trump's protectionism and the nature of responses by U.S. trade partners, investors need to find nerves of steel and avoid making rash decisions driven by fear." Also affecting sentiment, industry data showed Britain's construction industry shrank sharply last month, with civil engineering declining at the fastest rate since 2020 due to weak orders and a lack of new infrastructure work. Britain faces the lowest import duty rate of 10% in Trump's latest tariff bombshell, but the government has acknowledged the country's vulnerability to global economic headwinds. Susanna Streeter, head of money and markets at Hargreaves Lansdown, said the UK may appear to have been dealt a better hand in this round of tariffs, but it's so interlinked with global trade. It's set to be slammed by the harsh winds blowing through the global economy.